Good evening, everyone. Time for another member update. I apologize about not getting the forum up and running. I've been having problems with my email, and I'm trying to import everyone into the new forum that's actually going to work, where people are going to be able to ask questions directly and communicate. So you have my apologies for that. Hopefully I can get that up and running soon. Now, I want to go into what happened today in the markets, but I want to start off with the Dow and what happened in the NASDAQ. The NASDAQ actually, you can see the NASDAQ, the IXIC here is leading the Dow down in this latest sell-off that we have. So the NASDAQ lost a little over 1%. The Dow didn't lose that much. But if you look at this chart here, this goes back all the way back to 1995. So it's a fairly long-term view. Now, I've drawn a couple of things in here. I've drawn the current trend channel that we have, and you can see this flat top level that I've drawn for the MACD. You can see that this touch point here back in 2007 actually marked the last financial crisis. And these are cycles that run basically, and this is going to be the main topic of the night, is these are cycles of Wall Street looting that run on a regular basis. Now, I think that the cycle that we're in right now is going to amount to a tremendous amount of looting. And of course, they're going to do what they always do, which is come in with new regulations that don't really matter. We're going to get into that, but the NASDAQ suffered a significant decline today, and it's partly related to the stories that I'm going to go into. So let's take a look at one of these stories here. NASDAQ cancels trades in erroneous transactions. You can see this is just 5 hours ago on Reuters. So you would think, wow, this is big news that NASDAQ had to cancel a bunch of trades, erroneous transactions. And the story reads, NASDAQ Market Watch said on Monday it was canceling some trades in 11 securities that occurred within the first minute of trading on Monday. Some of the companies impacted by the move include Blackbox, Haynes, etc. The canceled trades had price movements of 10% or more from the previous session's close. So there's the violation. I don't really see how that could be by definition a violation, that markets aren't allowed to move more than 10% from the previous close. What if somebody disclosed their earnings after the bell, like Apple? So that's not really the rule. And you can see here the transactions occurred during the first minute of trading between 9:30 a.m. and 9:31 a.m. Eastern Standard Time. The exchange sent an alert. NASDAQ did not say what may have caused the error. And you're not going to hear what caused the error. Several of the impacted securities had been halted in the morning trading. So that's all you're going to get. You're a dumb sheeple. You're a stupid sucker. And we're not really going to tell you because you don't really need to know. Now, this is an article on Zero Hedge about, it's titled The Trades That Broke the NASDAQ. I'll read a little bit of it, and then I want to show you this chart. During the first minute of trading on January 27, 2014, there were wild price swings in at least 11 stocks. It gives the symbols. We know this because about 90 minutes later, NASDAQ canceled trades in these symbols, citing clearly erroneous transaction rule 11890. However, as Nanex shows in its usual great and imperceptible to the SEC detail, these trades appear anything but erroneous. We'd only imagine who the market maker algo belonged to that the NASDAQ cancel all of these trades. Goldman? And it goes into it. So let's look at one of these. This is in BKH. And it's a little bit hard to read, but if you look up close, you can see these are the exchanges listed here. You can see all these exchanges and then their quotes and the shares, and it's kind of a technical breakdown, but the chart gives you a more clear picture. You can see that right before the opening, and you can see this is right down here at the bottom. That's 928, 929, 930 is the open. Now, there are early market, pre-market trading systems, and all these exchanges participate in them, as well as aftermarket trading systems. And so this was anticipation up to the open. Now you can see that everybody was raising their ask. Here's the stair-step progression at the best ask. You can see at the open there was an $88.20 ask, and the bid was all the way down here around 55 bucks. So there was a huge spread. Now NASDAQ is citing some rule that they're canceling trades that are outside of 10% move. That's completely arbitrary, doesn't make any sense. The real question is, why weren't there any sellers that came underneath these people at 88.20? You have all of these exchanges, all of these people who have liquidity in this particular stock, and this happened for multiple stocks, so it's not just this one. And the bids. Now, if you remember, in the flash crash that we had, the first flash crash was back in the spring of, I believe it was 2012. It may have been, yeah, I think it was 2012. We had a number of stocks that went to zero. So the markets are clearly broken. There's no real regulation here. Now, let me show you the ultimate irony in this whole thing here. First of all, I want you to take note of this article. Charlie Shrem was indicted for money laundering. I don't know if you know who he is, but he's the vice chairman of the Bitcoin Foundation. It's a trade group promoting the adoption of digital currencies. And if you look into the story, I've covered it on the Bitcoin channel. The guy was really dumb. He talked about smoking pot, and he wouldn't do business with anybody who didn't smoke pot, and apparently he was involved in the Silk Road investigation. And you can see here Charlie's facing potential jail time, and as far as I know, the charges amount to the fact that he sold some of his bitcoins, because he was an early adopter. So I think he sold a lot of his bitcoins to a guy who was selling them to people who were buying drugs on the Silk Road. So is he a money launderer? I don't know. Is Bitcoin money? So pretty shady in the charges. We'll see how it works out in the courts. But while this was going on, and while I've lost the picture here that I had. There we go. While all of this was going on, we had Mary Jo White. And that is a picture that will certainly inspire confidence in everyone. That couldn't be a criminal or anybody like a smirking shyster. This has got this kind of old grandma, kind of like Grandma Yellen. Well, everybody can trust her. So we've got Mary Jo White speaking at a conference where she's talking about the new SEC. So you can see right there, the 27th, this is this morning, as the NASDAQ trades are going on, Mary Jo White is at the 41st Annual Securities Regulation Institute in Coronado, California. And this is her speech. I'm just going to read some of it. And we'll start here. As I have discussed, technology has worked a fundamental shift in the way securities are priced and traded, a shift that has only accelerated in the past several years. In the last 2 years, we've tried to send a strong enforcement message to the exchanges and alternative trading systems that play critical roles in the securities market transactions that they must operate fairly within the rules and with a close eye on their responsibilities to safeguard their technology, cases have been brought against an exchange that inadequately tested its IPO systems and was therefore unable to handle a highly anticipated IPO, and then did not follow its own rules in the aftermath. A different exchange for compliance failures that gave certain customers an improper head start on trading information, and a dark pool for failing to protect the confidential trading information of its subscribers. When technology presents new opportunities for innovation, changes must be deployed responsibly after carefully testing and within the rules and parameters of the trading environment. Market structure integrity actions will remain a priority in 2014. As you will hear when Andrew Seresny, our Director of Enforcement, speaks to you over the coming days, there are many other enforcement. So apparently it's a very long symposium going on here. They're all talking and boasting about the wonderful regulations they have as the algos are wreaking havoc on the NASDAQ stocks. There are many other enforcement priorities for 2014 that you should be aware of. These include, but are by no means limited to, FCPA, insider trading, and microcap fraud. That SEC seems to concentrate on all the little guys. The kid trading in his mom's basement, only people indicted for insider trade. Of course, you have Martha Stewart for a few thousand shares, and we'll look at the bigwigs that get away. It will, in short, be a very busy year in enforcement. Conclusion. I hope I've given you a sense of some of the things we'll be doing in 2014 and a flavor for how dramatically and vibrantly things have changed at the SEC as our world and markets have changed. There is more, of course, we will be doing and considering in the coming year, both on our own initiative and as required by Dodd-Frank and the Jobs Act. So that's Congress protecting your retirement monies and your tax monies by passing new laws that create new regulations that ultimately never get enforced. Equity market structure, duties of broker-dealers and investment advisors, the management and responsibilities of clearing agencies and credit rating agencies, executive compensation. What? They're going to talk about how much you can be paid. Target date funds, systemic risk issues, broker-dealer financial responsibility, and more. Wow, that's a lot, a big mouthful there, a lot to bite off, considering that at the time that you're doing that, they are raiding the NASDAQ with algos so bad they have to reverse the trades. It is a constant but always exciting challenge to keep pace. I don't think you're keeping pace. And indeed to accurately see around the next corner for the newest market developments or another innovative variant of or new venue for fraud. I now am privileged to have an up-close and personal role in all of this, and it's my strong conviction that the women and men of the SEC are, as has always been true, more than up to these challenges. As Alan Levinson said in January 2003, almost 11 years to the day when he spoke about the strength of the SEC, quote, "It was the creativity of the staff. They had a drive and a genuine interest in protecting investors and the public interest." I'm sorry, I can't stop from laughing. The challenges and tools change, but creativity, drive, and commitment to the mission continue unchanged at SEC in 2014. Alan Levinson, I think, would be very proud. Thank you for listening. So here's these bureaucrats and just clueless government regulators. Of course, that's why they're there. You can see pretty much clearly on Obama's face that he knows what's going on. But so I want to show you a summary of the last crisis that we had, where this is Matt Taibbi or Tabby, however he's called, and he's a liberal, so I don't agree with him on a lot of things, and obviously since he writes for the Rolling Stone, he's on the inside of that new left. But this is a look at the Jefferson County fraud. If you remember, this was a scam run by J.P. Morgan and Goldman Sachs. I'm just going to read the end part of it. I encourage you to read the entire thing. So this is what was going on in before the last financial crisis. And we can see what's going on before the next financial crisis. He says, and here's the kicker. Last year, when Jefferson County, staggered by the weight of its penalties, was unable to make its swap payments to J.P. Morgan, the bank canceled the deal. That triggered a one-time termination fee of, yes, you read this right, $647 million. That was the money the county would owe no matter what happened with the rest of its debt, even if bondholders decided to forgive and forget every dime the county had borrowed. It was like the herpes simplex of loans, debt that does not go away, ever, for as long as you live. On a sewer project that was originally supposed to cost $250 million, the county now owed a total of $1.28 billion just in interest and fees on the debt. Imagine paying $250,000 a year on a car you purchased for $50,000, and that's roughly where Jefferson County stood at the end of last year. Last November, the SEC charged J.P. Morgan with fraud and canceled the $647 million in termination fees. The bank agreed to pay a $25 million fine and fork over $50 million to assist displaced workers in Jefferson County. So far, the county has managed to avoid bankruptcy, but the sewer fiasco has downgraded its credit rating, triggering payments on other outstanding loans and pushing Birmingham towards the status of an African debtor state. For the next generation, the county will be in a constant fight to collect enough taxes just to pay off its debt, which now totals $4,800 per resident. The city of Birmingham was founded in 1871 at the dawn of the Southern industrial boom for the express purpose of attracting northern capital. It was even named after a famous British steel town to burnish its entrepreneurial cred. There's a gruesome irony in it now, lying sacked and looted by the financial vandals from the north. The destruction of Jefferson County reveals the basic battle plan of these modern barbarians. The way that banks like J.P. Morgan and Goldman Sachs have systematically set out to pillage towns and cities from Pittsburgh to Athens. These guys aren't number-crunching whizzies making smart investments. What they do is find suckers in some municipal finance department, corner them in complex lose-lose deals, and flay them alive. In a complete subversion of free market principles, they take no risk, score deals based on political influence rather than competition, keep consumers in the dark, and walk away with big money. It's not high finance, says Taylor, the former bond regulator. It's low finance. And even if the regulators manage to catch up with them billions of dollars later, the banks just pay a small fine and move on to the next scam. This isn't capitalism, it's nomadic thievery. So that's the article from Matt Taibbi in Rolling Stone, The Last Crisis. You can go and read it, the whole thing, of all the bribes that went along with the bankrupting of Jefferson County. Now, we're to believe that the SEC now is on the job and our new regulator is going to protect us from this sort of thing happening in the future. Of course, nothing ever changes with Wall Street. They just continue to loot things, and it's going to continue forever until Wall Street is actually exposed for what it is. So I'm running out of time, so I'm going to wrap this up. In conclusion, I think that this is the beginning of another downdraft we're going to get in the stock market. And when we get that, we're going to get more regulations proposed to, when all the crooks are exposed, the people who are swimming naked, we'll have a whole new slew of regulators coming out. But it's quite ironic that while she was speaking about the power of the SEC, they were rating the markets. And we'll talk to you next time.